Right now, one company holds nearly 1 in every 20 Ether tokens in existence. Tom Lee's Bitmine Immersion Technologies, listed as Bmnr, has just confirmed another weekly purchase of around 9,900 ETH. That takes its Ethereum treasury to roughly 5.8 million tokens, or 4.8% of the entire 120.7 million ETH supply. This is not a passive fund tracking Ethereum, it is a corporate treasury actively accumulating the asset. The position is worth about $11.2 billion. Bitmine has already completed 96% of its self-declared Alchemy of 5% target, and today's disclosure leaves it only a few 100,000 coins away from owning 1/20th of Ethereum. The speed is the real story. 14 months ago, Bitmine held almost no Ethereum under this strategy. It has averaged enough weekly buying to capture 4.8% of supply, and the pace is accelerating. Chairman Tom Lee frames it as a long-term treasury plan, not short-term speculation, mirroring what MicroStrategy did for Bitcoin. Bitmine has also staked around $9.2 billion of its Ether. Staking locks tokens up to help secure the Ethereum network in exchange for yield, so a large share of its holdings cannot be sold instantly. That creates built-in discipline against panic selling. This matters today because Bitmine is not buying in a vacuum. Every weekly purchase removes coins from the liquid market, and staking removes more. Ethereum jumped 27% in July, and while one firm did not cause that alone, persistent institutional demand is a key tailwind. When a buyer of this size keeps accumulating, available float shrinks, so steady retail demand hits prices harder. There is also a confidence signal. A listed company still buying near 5% suggests sophisticated money does not see the current price as the top. The downside is concentration risk. If sentiment shifts, this entity can dominate market psychology. Now look at the 5% threshold, which sits at about 6.04 million Ether. Bitmine holds roughly 5.8 million, so it needs approximately 230,000 more tokens. At the latest weekly rate of around 9,900 ETH, that could take about 23 weeks, but the firm has bought larger blocks before, so the date may arrive sooner. Crossing 5% is not a legal control point in crypto, but it is a psychological and political marker. Regulators and developers may face questions about whether One Treasury should hold such a large share of a proof-of-stake network. For investors, the key signal is whether Bitmine keeps buying after hitting its target, because that will show if this is a one-time objective or an open-ended accumulation. The headline is simple, but the implication is not. Bitmine owning 4.8% of Ethereum is evidence of deep institutional conviction, and it is also a new concentration risk for the second largest crypto asset. The firm has spent 14 months building an $11.2 billion treasury, staked more than $9 billion of it, and is now closing in on the rare psychological milestone of 5%. You do not have to copy the trade. But you should track this threshold, because when one buyer holds 1/20th of the supply, its next moves become market news. That is no longer a passive story, it is a structural feature of the 2026 crypto cycle.